All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for the weekend for April 26th, 2024. Start with the 30-minute hybrid swing. So we're looking at 30-minute bars, beginning with Alcoa. As always, this yellow box represents the daily trade. The red box is a 5-day bracket. Blue box is 10-day. So this was yesterday's trade series. There was a big gap up to here. It continued to go up, so we bought it in that first bar with a standard risk. It came all the way up to here, then rolled down, exiting here for 1R. I missed the short. It held support above the Bollinger Band mean, above the anchored VWAPs, and then reversed. So I re-entered, standard risk, and scratched. So net 1R. And then I missed the follow through here. AI was a gap up and go, standard risk, 1R. Exiting at the skin of the dragon after the R10 rolls over. Then I exit at the skin of the dragon, which is this. It's premature to get out here because we're using the PSAR. But once the R10 rolls over, I accelerate that to the skin of the dragon. That's standard work now. Very satisfied with that exit strategy. Caterpillar, PSAR flip and a scratch. Cliff, no trade, sideways quiet. CVS, same thing, no trade. DIA. So this was a, it opened where it closed, broke to a new high of the day. So here's the close, opened here, sold off briefly. One risk box off the low of the day. Exit here, and it came back to the Bollinger Band mean. It found strength. That's a 1, 2, 3 re-entry, re-entered, standard risk, and just kind of ground down for about 0.5 by the time all was said and done. I guess this was 1, and that's 0.5, so about 1.5 for the day on DIA. Generally upward trending, but it was pretty quiet, almost content. Disney, no trade. Devon Energy, another beautiful long side move. So here was yesterday's trade, and the close was right there. And today it gapped down to here, sold off hard, and that's a 1, 2, 3 entry with a rising PSAR, a rising VWAP, standard risk, ran straight to the top. The R10 rolls over. I take the exit in the last bar at the skin of the dragon. That's about a little over 1R. So a little 1 plus some change. Yeah, the rectangle just makes it, it's almost like crosshairs now. I should have seen that before. No trade in EEM. And again, this is the issue that I always have with it. You just got to be really careful. I don't think it swings very well on short-term swings just because of the magnitude of the gap. I mean, the gap in this case was twice as large as the daily range, because this is when all those markets are trading. And so you're just getting the follow through in the US sector. So unless that thing gaps and then breaks right away, it's better just to leave it alone. And then I don't hold it overnight. ETHE, you can't short it. Otherwise, this would have been a logical short in here or here. The currency was shortable. Here's where the R10 bottoms out, and as it comes rolling back up, that's like a 1, 2, 3 entry here. So entering standard risk, rolls down 1R. Mexico, this was a gap and go for 2R, standard exit. Missed the follow through. Here, I didn't feel like there was enough time left in the day, and then I missed that move. But we did cash, I think, about 2R right there. Brazil, even better. Huge gap and go. Risk box off the low. Speculate in. 2R with the standard exit at the skin of the dragon. Home Depot, gap and go, an emerging dragon because it's above the peak and it's above the Bollinger Band mean. So I feel pretty good. It rolls up and I gave back a lot. So we only kept a fraction and gave back almost 80% of what we gained. So that was pretty poor management. In retrospect, maybe, but at the time, seemed reasonable. Intel, huge gap down. It sold off hard and reversed when it came back across the rising VWAP, standard risk. It ran up and it looked promising. I was hoping to see it go close the gap, but it rolled over and I had to preserve half an hour here, and then it just chopped sideways. They're just getting slaughtered. Man, oh man. Once maybe the greatest American tech company of all, in my view, because they made hardware that made computers go and just blew it away. I mean, that whole market just. Andy Grove's rolling over in his grave. IP rolled over 1, 2, 3, 4 entry when it crossed the dragon and the VWAP. I had to get in standard risk, and it did pretty well and came rolling back. We kept about 0.5R. I probably could have saved a little more of that, but still. IYR, this was a good one. This is turning out to be a nice intraday trader. So here's yesterday's close. Gap up to here, continues to go long with the standard risk, runs all the way up. The 1, 2, 3 exit would have been here. I waited till the VWAP and preserved 1R. And then it stabilized and then started rolling over, and the market showed weakness more broadly. So I gave that a try on the break of the VWAP, and it collapsed in the last hour nicely to gather another 1R. So total 2R. But I still actually like the upward movement of it. I think this will be seen as a buy on dip next week, but we'll see. So no over the weekend risk. Coca-Cola, just pure flat, taking a break. Regional banks, I missed the collapse in the afternoon. McDonald's, so this was of the Coke and hamburger team, this was yesterday's close. Here's the big gap down. Then it rolled over and it moved a risk box off the bottom. So just speculate in. It ran all the way up to here. Exit, stop and go short. And then I gave back most of it to keep a little fraction. So the first one was good. That gained 2R, and this was basically a scratch. That doesn't look promising for next week. I don't know. Not sure what that was about. Rounding error, maybe. So maybe 2R on that one. 3M, no trade. Merck, no trade. Microsoft. I tried the gap reversal. So this was a huge gap up to here, high of the day, and then started to drop like a stone, shorted, came all the way to here and then back up and basically scratched. And then it went nowhere all day. MSOS, marijuana. So this was also a big gap down, sell off, and then started rocketing up. So long cash, re-enter, again, standard risk, and this one got traction all the way to the high of the day. And then as this started rolling over, I just took the exit here. The rebound made it look good, but was happy to get 2 out of this one and scratch out of that one. Nike, missed the short completely, just span of control. NVIDIA, gap up and go for 3R, standard exit. Clean energy, a gap up and go for 3R, standard exit at the skin of the dragon. Nice. Palantir, gap and go, standard exit at the skin of the dragon for 2R. Also nice. Rivian, this was a gap up after like a supported spring crossing, standard risk. Standard risk here. And big reward, stabilized. I thought about a second position here, but we were running late in the day. So it ran up to here. Here's the peak of the R10. And then I just take the standard exit at the skin. So on 1, 2, 3, almost 4R on that one. Rivian was nice. SOUN, no trade. The SPY was a big gap up and strong follow through into the close. We talked about that last night as a strong possibility. Tesla gave back a little bit after a run up, but that just felt like it was complacency and locking in the gains of the big gap here. So that's really promising for next week. I expect to see some buying pressure early next week in Tesla. Anytime it's under 200, it's on sale. Walmart, no trade. U.S. Steel, I missed the afternoon emerging, caught a 2 here. I was concentrating though on XLI. This one gapped down to here. Here was the close yesterday. It gapped down to here, sold off a little bit, then came running up. So long in the first 30 minutes, ran up to here and then down, exiting for 1. Then a 1, 2, 3, re-entry, standard risk, standard exit, 1R, so that nets about 2. So pretty happy with all of that today. The market was behaving in a respectable manner on a caught a 2 bull, I would call him. I took a quiz. I'm apparently a lawful good dwarf monk ranger at the hero level, 4th one. Let's see. Yeah, so here's the this is Palantir. This was a big gap up. This is all on 3-minute charts now. So this is the sniper trade of the day. So there's your OR3. Gapped to here, sold off, closed here, and then resumed. Took out the high of the 3-minute bar, so I'm long. That's the standard risk in Palantir. That's the R10 equals 12 cents. So standard risk, that thing runs right up to here. There's the peak of the R10. I take the skin of the dragon exit for about 2R. It comes down and reverses. The R10 holds, or the RL10 holds strong at the skin of the dragon. So I re-enter. It gives me about a half. Another caught 2 scratch. So I give it a break. It chills out at lunch. In the afternoon, after holding that double bottom, it comes back out of the dragon, across the VWAP, across the Bollinger Band mean. So I just speculate in. it runs up. Here's the peak of the R10. I take the PSAR exit this time. I was holding on longer, and I preserve 1R. So we net about 2 plus 1, so about 3R on that one. That felt pretty good. I think Palantir's back in the game. And then this was Mexico on 3 minutes, EWW, for those of you trading EWW. So here was a gap up, sold off, recovered. So here's the OR3. The OR3, it never gets out of there, but when I see this formation that's holding support at the edge of the dragon, and I see the VWAP rolling up and the R10 just going, I just speculate in. Standard risk. Keep a fraction. Now, notice how that acts as a barrier well below the VWAP all day. So that keeps me in with a long side bias. So here's a COTA 2, which loses half. Here's a COTA 2, which scratches. Here's a COTA 2, which pays 1. Here's a COTA 2, which scratches. Here's a COTA 2, which pays 2. So you get 2, 0, 1, 0, 0, 0.5. And so after you get rid of some admin costs, you get about 3 on a standard grind. I'll take 3 all day long. All day long. I like this one especially because you get out of this quiet MACD and you get a very shallow red and then crossing the 0 line into the summer. That feels pretty good. You get another one right here, coming out of the spring into the summer. You get another one here in the spring, getting ready to cross into summer. So that's pretty helpful. Take a look at the traders here. This is the Euro Aussie dollar on 5 from Brian. He's into trade 13 on this sequence. PSAR flip, standard risk, standard exit at the PSAR, far side of the dragon, 1.6. That's not too shabby. And this is the Euro US dollar on 5s. This should actually be a red dot because he's getting short there. So, and I know because of that wrist box. So that means this should actually be a green dot buying at the skin of the dragon for 1. Then this should also be red short and scratches green here. And he gets 2.8 on that. So he's up 13.3R over his last 15 trades and looking pretty good. He's doing exclusively currency pairs on the 5s. Nothing wrong with that. He's very smooth and orderly with that. So well done. George gets a scratch here on Caterpillar after being in the money a little bit. We might have saved a little on that, but I get it. Minus 0.6 on CVS. I think that one, he exited properly here. You know, this is supposed to go right away. I'm sorry. This is supposed to go right away. It doesn't. He probably exits here and gets filled there. That's good marksmanship. Hamad does minus 1.8 here in Microsoft. There really was no follow through on this one during the day. So quick scratch, couple quick micro losses. After that gap, there just was nothing there. So those net out to minus 1.8. NVIDIA, on the other hand, he crushes. Now, this is where I'm going to say in the find the mover piece, you got that kind of move right out the gate, then we should be trading this instead of trying to make Microsoft work. And I might have tried somewhere in here, although it is, late in the day. But that's 4.4 on NVIDIA. And another 4.3 in XOM. So this is in the energy sector. It gets a little grindy at first, but then gets aligned with the market pretty well and gets the second position in and perfectly placed and sweet exit. So he comes in with 6.5 for the day. Well done. And, if we get a hold of that, that shift into NVIDIA sooner, it's an even better day. Finding the movers. Just taking a quick look here at Luke's reporting in from a coaching session on his current project. This maximum favorable excursion from the previous day is becoming an important measure for him. He gets the initial entry on it like a OR5, and then is able to ride this thing all the way down and then takes the standard exit. He's using a standard move off the recent low. And then when it breaks to collapsing dragons, Hulk smash, standard work. And he gets a stop and reverse here and just smashing this trade in both directions. And he's not over optimizing, I would say. He's if anything, I would say after this peak, once I see that, I'm out here. I would like to keep that extra piece, but he's auto programming this with the robot on, and this has not taken much time. So that's pretty sweet. Getting ready to publish that system. So let's take a look at his numbers. Yeah, I think so. I will defer to his to the way he's calibrating that, because he's doing, I think he was doing currencies on that one. So the high and low of the day isn't necessarily the same. But I have to see the latest version of his calculator. It is a computed number though. I can say that. So this is 38 days in the trade. 27 days are winners, 11 are losers. So if we're looking just at the daily results, the win rate is 7-3. And the average win is 5.8 to minus 3.5 on the loss. So that's 1.72, 2 to 1. So you're getting better than 2 to 1 winning days and better than 2 to 1 payoff. That is a win-loss ratio better than 4. And annualized R gain 788 R, expectancy over 3. SQN 100 is 5.4. SQNN is 3.3 because it's using 38 days as the N, using the day as the N. When you look at the individual trades, the winners are less than the losers. So it's a 2 to 3 win-loss ratio. But the average win is 2 and the average loss is 0.8. So you get a 2 to 3 winning percentage, but you get 2.5 to 1. And then when you take a lot of trades, that's like 10 trades a day, it converts to a net on the daily result where you look like this. That's the power of expectunity. So you get the expectancy over here is 0.34. The expectancy on the day is 3. And the SQNs are better because the aggregate for the day is better. And that's what we want to see in a machine that makes R on the intradays. I think he's just about ready to start producing a teaching course and a systems course on that. And it's fully automated and capable of being robotically traded. So I think that's going to be of interest to people that are looking for an automated, purely mechanical intraday system, no overnight risk. So be on the lookout for probably a sales pitch or an announcement on that. Okay. That's the result, by the way, of Luke going through the coaching program. 4 years ago, he was a novice trader, and he did a year's worth of the Kata 2 challenge, looking just at CLF. And then after a year of that, he expanded to EWW, DIA, and then the Aussie USD pair, so that we had essentially the Kata 2 challenge, but with a narrowly focused index that's very volatile, a conservative index that tracks the S&P, and then completely different, a currency pair. And then at the end of the second year, his coaching program, he then kind of got into refining the trades to his time and strength. And he was willing to make a trade-off between frequency of trading and precision. So what he was willing to look for were, or I guess simplification is how I would put it. That, like some of the things I showed on that one trade, he's willing to round that off and have simple rules with lots of opportunities, and then make it up with expectunity rather than having to be present each day for every minute, because he's got a business to run and 7 kids. And so now the automation of that was really important. And where he's gone from sort of proofing the standard rules was to refine that to fit his own circumstances. And this is where we are in this third year of development. And my intention now in the coaching program is, once guys get into that, is that when they come out of that, they come out of it with bulletproof systems that are teachable and which they can coach. Because he's been through the Creativity 202 course, which helped a lot with reframing who he was as a trader and really discovering his strengths. And the Creativity 202 course with the weekly accountability partners and the the transparency and the speculative nature that frees up your frame of reference really is what I think helped prepare him for this kind of development. So that's my soft pitch for the Creativity 202 course, which really emphasizes creativity. It has a lot of trading metaphors and exercises in there, but what we're really trying to do is maximize creativity that's appropriate for you through storytelling. The small coaching or small group coaching is really looking at specific systems development, focusing on the deliverable. And that's what Luke's been doing. He's not doing the small group coaching. He's doing the one-on-one coaching with me because of the time differential down in Aussie land. Plus, it's important for him to do a deep dive and refine his systems and focus on it deeply. So that's just an update from Luke and where he's at and a preview of coming attractions. So if you're interested in the small group coaching, there's still slots available in cohort 2. That's a year-long program with weekly check-ins and accountability that meets on Tuesday nights. That kicks off officially in May. So we still got a little bit of wiggle room left. And it goes for a year. Creativity 202 is self-paced and features small group check-ins and access to literally 400 hours of coaching between me and the other Creativity 202 members. That is a freaking gold mine. And the reason I can say that is that Creativity 202 actually is the same structure that the Army agreed this week to adopt for its leader development and coaching creativity. And the 3-star general was impressed with the evidence that we could show him that storytelling and our methods work. And he's committed the Army to put that program into 25 schools, which have 7,000 faculty and 200,000 students per year. So we are designing the lesson plans. We're going to do an abbreviated version that has 15 hours. What you get in the Creativity 202 course is several hundred hours of that. So it's kind of bulletproof. I'm also signed a little tentative agreement with University of Copenhagen to build out a leadership certification course in creativity using storytelling that's going to get taught in the education doctoral program at St. Mary's University here in Leavenworth, where I'm the research methods professor, and then also being taught in Copenhagen. And we got some high-powered guys going to work on that, including the former director of the Denmark National Police. He's a pretty amazing guy. So just a preview of some coming attractions: Creativity 202, small group coaching, and all of that rests on the foundations course. So get it while it's hot. I'm 67 years old, and I don't know how long I'll be around. I'm saying that health is good. Soccer kids are doing great. I'll be here around as long as I can, but we don't always get to choose. So take good care. I should also say the infrastructure for all the courseware that will live beyond me. That's the infrastructure we have in place is going to keep that learning community of practice around for decades. So it's a long-term investment in some proven strategies and methods for achieving excellence. All right, that's everything we got for today. We will see you storytelling guys tomorrow morning at 8:30. And Monday night for cohort 1, Tuesday night for cohort 2, and small group coaching. Take good care.